Our market master is Andrew Holland. He's Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. Andrew, great to have you with us here. Thank you very much for your time. Uh, some of the near-term indicators like the relative strength index, etc., are extremely stretched now. Just a quick near-term view in terms of where we go from here, directionally, Andrew, any thoughts?
We could stay higher for longer, but it's all markets, including ours, are looking very overbought. I think the Goldilocks scenario, which people are trying to bake in, is probably not going to turn out to be that at all. So I think it's whether it's a bear market rally for us, but certainly globally, I think it is. So you could see a downtick from here because the Fed minutes were not conclusive, shall we say, in terms of what they were trying to say. And Prashant, I've just come back from the US, and a few things, I've been saying that I think the Fed will go on hold in October, and I'm still sticking to that for the moment. But two things that kind of struck me when I was there is one that in the hotel I was staying, which is a well-known hotel, when I went down for breakfast in the morning, they said, no, you have to order it for room service because we don't have staff. There's a big staffing issue in the US, and I think that's what's probably going to keep employment levels higher and probably inflation higher too for a little bit longer than I was expecting. So that was the first thing I noticed. And the second thing is that, most of the restaurants, the top restaurants you want to go to, availability was there. And in San Francisco, where it was, everything shuts by 10 o'clock. Now, I don't know if that's because, they just can't get the staff or, but I was very surprised. So there's a few things in the US, I think, which are stickier than I thought. So I think the Fed will have to do more in terms of rate increases and get the aggregate demand down, because it's certainly a problem, I think, for the US. But it's a lot better than what's happening in Europe.
Okay, maybe that's a global phenomenon, Andrew. We're seeing that in a lot of places. By the way, since you spoke about hotels, just look at Indian hotels. That's almost breaking out to a fresh all-time high. But Andrew, so are you still sort of, what's your view then? Since you run a long-short fund, are you looking at now raising some cash level or maybe perhaps going on the short side as well? And if yes, what kind of stocks or sectors do you think you'll have a negative view now after the rally?
So I think that the hedges have been high, Anuj, as the market's moved higher, and I think that's where we'll continue to be in the very kind of short term of the next 1 month, because we think coming into September, there's going to be a few headwinds, which globally, I think, are just being forgotten. If Russia decides to do anything on the, in terms of shutting down the gas, Germany will just go into free fall in terms of the economy, and that will send the euro below parity. So all of these things, I think, will play out. So I think it's become very rotational in the last few weeks in terms of which sectors and companies. So I think overall, I think the risk for the market generally is to the downside. So I think those sectors which pushed the market higher initially, which was autos and banks, will probably see the biggest profit taking as the market kind of starts to head back south.
Andrew, hi, good morning. We were just discussing with the management of Maruti about the kind of demand that they're seeing for new products, and it's been phenomenal, right? Maruti, M&M, TVS Motor, Eicher, demand is coming back in a big way. Do you think that autos, of course, the rally has already happened, but do you think that this is the start of some sort of structural uptrend in the auto space?
Yeah, no, I mean, I don't know if I mentioned it last time, but I went to see the Mahindra new kind of SUV a month or so ago, and I was told that it was sold out and there's a 2-year waiting list. Whether that's come down, I don't know. But the trend for the auto sector is demand is there, that's for sure. And with commodity prices, having kind of eased a lot, probably will continue to ease. That's going to be the tailwind for the sector. So I think whilst I'm saying that, it could be one of those which will see some profit taking. Banking and autos and consumer discretionary are sectors which if there is a fall led by these sectors, is where you should be picking up, because I still think the deflation trade is going to play out by the end of the year, and that leads to these sectors. So I haven't moved away from that. I'm just worried about some of the things which the market's trying to just take in its stride and say everything's going to be okay.
You know, one of the big worries was oil, right? And that always, when it moves like it did recently earlier this year, that's pretty bad news. But it's cooled off substantially. We're looking at a $40 drop from just two and a half months back. Now we can ponder over whether it'll stay here or move back higher. But that's got to count broadly and kind of paper over some of the other concerns that you're highlighting.
Yeah, no, that's right, Prashant. I think the oil price is telling you that there's a problem with global demand, and I think the market's taking it positively, because obviously it should be helpful in terms of inflation going forward. But it's you're then ignoring the fact that you're going to have a global recession, and it's whenever I look, particularly in Europe. Things are spiraling down very, very quickly, and I think the market's just not taking that into account. It's looking on the rosy side of the equation and saying that interest rates won't rise. But again, I think a lot of people don't remember the last recession of 2000 and the pain it had in terms of markets as well. So I think everyone's trying to say that bad news is good news, Prashant, at the moment in terms of that interest rate environment. But at some point, bad news will really be bad news.
Okay. Now, Andrew, what about the Indian IT stocks? Because that's where the big debate has been in terms of the valuation reset, given the higher interest rate environment. But we've seen the stocks make a big comeback, even in NASDAQ and back home. What's your view?
Yeah, so I think the IT stocks are going to be really a hostage to what happens to the tech stocks in the US, and that's been playing out for some time now. The correlation's very high. So if you have a very positive view that the tech stocks in the US are going to start doing well, which I don't, then I think this rally in IT stocks again will probably fade as markets correct and tech stocks correct in the US, because I think that's where the most pain I think will be felt in the US economy.
Okay, so what does one do then if one has IT stocks? Because these are stocks. If you look at even the recovery, despite the recovery, stocks like say an HCL Tech are down about 30% this year. Do you move out? Do you stay invested with the hope that these are still good quality companies that will recover at some point? What do you do here?
So they've always been a place to hide in when markets fall, and obviously that could play out again. But to be honest, I just think you have to be in sectors which are going to be beneficiaries of a deflation trade at the end of the year. That's going to be banks and autos and consumer discretionary. It's good. I can only think of those three. The rest will follow and relatively underperform, but I think this is where you're going to get the biggest bang for your buck going forward. So IT is probably I just don't think there's enough tailwinds for the sector, given that it's just following what's happening in the tech stocks in the US. So unless you have a very strong view there, then I think there's other places you can play, or other sectors you can play, which will take you forward in terms of getting better returns. I'm not saying any of these stocks are bad, but I just don't think there's any catalyst at the moment when the global economy is going into recession.
Okay, Andrew, one last question. Do you fear this year United could be facing relegation battle, going by what the first 2 days?
Yeah, well, we've become, a kind of a global joke. Maybe the stock will become one of those meme stocks now. I don't know, but it's looking pretty dire, and I'm not hopeful for the game on Monday against Liverpool. So probably won't even stay up. It's a bit late in the evening, but usually I would. But I just fear a little bit like the markets that we're probably heading south for a little bit longer than we expected.
I was wondering, Andrew's generally more upbeat in his interviews when he joins us, and this time he is so dull, and I couldn't put my finger on it, and finally, I realized that, oh, he's a Man U fan as well.
It's not a good time to be a United fan right now, I can tell you that.
Well, the times change, right? I mean, things change, it's a cycle, I guess. At some point, United's going to get back up. Andrew, what say?
Well, I've just been watching the All or Nothing, where Arsenal were bottom of the league this time last year. So I'm hoping that the same will happen for United.
Mr. Musk doesn't want the team. That's the other one, right?